Hello guys, this is fairbuyingofoptions.com, and today I would like to take a look at the Australian dollar, US dollar, for one simple reason. I would say that the move to the downside from these highs is nothing. So from these highs here is nothing but an impulsive move, part of a flat. So that would be part, basically should be labeled as a C wave. So these are the highs from where we should start the count, like this, and with the vertical line we mark the moment from there. And I would say that to the downside we have a first wave to the downside to be labeled as this one here. Like this. Then of course to have a second wave here, or here, it doesn't really matter. Then a third wave all the way to the downside here. And at this moment of time, actually we have two different situations. What I would like here to do is to mark these lows here, because this area here, even on the move to the downside, should offer some important support and resistance area. And from this moment of time, if you go back and check this area, from this moment of time it offers support here and here and here. So those actually were nice places in which we should have looked into buying call options on a bounce. So if you want to have an educated guess where price might find support, this would have been a nice area. Now, the real question is this move to the downside completed? Is the fifth wave done here at the lows? Probably not. I will look for a fourth wave. That is this one here, in the form of a flat. So this to be the A, and then A, B, C for the B wave, and then the C wave here. So this to be the fourth wave type. And then to look for the fifth wave to the downside, and the fifth wave to the downside probably is completed here. If market will go and make a new low here, it means that the fifth is not done here, but will be done here. The outcome is still the same, as I would still like to go and buy call options. Five-way structure, as mentioned a bit earlier at the beginning of this analysis, this five-way structure actually comes as a C wave of a bigger degree, like this, and this to be the end of a B wave of a bigger degree. And normally after the five-way structure, 1, 2, 3, 4, 5, we should look for this being part of a flat. We should look for this area here, this level here, to come again. So of course we are trading binary options on a Friday in the afternoon, and we should not pick that much of an expiration date. You might choose end of week expiration date if you want, end of month, sorry, expiration date, as this is the 23rd, but this would be next week on Friday. I would like to take my chances and go for an end of day expiration date today on Friday. So basically in something like 8 hours from now, 8 hours and a half, this option would expire. So let's write on the screen what is the recommendation here. Well, the recommendation is right here in 92.24 to go and buy call options. With end of day expiration date. So buying call options with end of day expiration date is our recommendation on the Australian dollar and the US dollar. normally if this was not Friday, and if this was during the trading week, I would have chosen the end of week expiration date. But being Friday, I would like to see some price action for the closing, for the fixing, for the end of the day, and hence buying the call options with end of week or end of day to day expiration. The end of day means by the time the US markets are going to be closed, and again, this is our expiration date. Thank you very much for being here. This is fairbinary-options.com, and all this analysis and recommendations are possible due to the help of our sponsor, Lion Eye. Bye bye.